It's Thursday, and that means it's Legacy Day. And a few months back, if you remember, oil went negative on the futures market. And I thought, that's the craziest thing I've ever seen or will see, right? This is a legacy financial market, something many of us use every day, going to negative numbers on a futures market. What is even going on? That's been explained many times over at this point. But what's happening now is somehow even more crazy, more insane, more wackadoodle than before. I'm going to start by talking about the stuff I usually talk about, correlations, Dixie, and whatnot. Now, if you were looking at these charts, you wouldn't even know what's going on with the rest of the market, other than the Dixie, or other than the VIX, my bad. I keep mixing those up. VIX, the line chart here in the orange, is the volatility index. Since COVID, it spiked way up. It's also known as the fear index. So if there's fear in the markets, or if the markets are just volatile, which is usually fear, not always, then the VIX goes up. And the VIX had been falling. We got a vaccine for COVID. There had been some hopes that the VIX would decline. I've been talking for weeks about declining VIX, bullish for crypto. So here we are today. VIX is 30 from 20 a couple days ago because of the GME stuff, the AMC stuff, the Nokia stuff, all of the shenanigans going on, which ultimately is a giant short squeeze and is normal and natural and happens in markets all the time. It's just the fashion that it's happening is catching everyone's attention, obviously. And hedge funds are being blown out. It's really a beautiful, beautiful thing to see, to watch hedge funds come crying when they take risky bets and lose. Well, sorry, that's part of the game, right? This information is publicly available to everybody. That's why I always talk about open interest in all the articles, because I'm looking, is the market super short, super long? Is there a risk for a short squeeze, long squeeze? Because stuff like this can and will happen. So getting back to correlations, Dixie's still deeply negative. Gold oddly deeper negative than it was last week, which is good, I guess, considering gold is declining and Bitcoin is just kind of chopping up. SPX correlation still extremely high. NDX correlation still extremely high. Now these will be important if what some people think as far as legacy, in that all this stuff is just a giant top signal for legacy as far as market cycles. So it's potentially a nasty top signal for things like SPX, NDX. Just a risk-off situation for a lot of people watching what's happening here, especially seeing VIX where it is. I mean, this is triggering all sorts of de-risking, de-leveraging, which is normal and natural and good and needs to happen every so often. And unfortunately, when we see that, and we see the correlations with legacy like we see with BTC, it's a very dangerous game, because de-risking and de-leveraging often means a decline in BTC prices, as we saw in March. Looking at Dixie actually went up quite a bit over the past week. I saw some commentary that it was potential rotation out of stocks, equities, into safe havens like the Dixie, which I thought was funny. Again, you're just gonna have a lot of people looking at what's going on in GME and AMC and everything else, and thinking, you know what, I'm gonna cash in my chips, just go to some other table, right? That's just part of the game as well. That's gonna happen naturally. So it's not unusual that, like I mentioned, past 2-3 weeks now, that we're consolidating between 88 and 90 in the Dixie, with the next stimulus, which should happen to some degree, whether it's $500, $1,000, $1,500, whatever it is, there will be a stimulus, and that should drop Dixie further, which should bring BTC up because of how things are so negatively correlated. When Dixie declines, BTC rises. Looking at gold, gold has chopped down versus Bitcoin's chop, which is kind of just sideways / up chop, but Gold still has this risk, as does BTC, of this edge-to-edge move from 18 to 16 for gold. And the BTC cloud looks eerily identical. And if you've traded cloud enough, you start to see certain reappearing fractals and just market behavior surrounding the cloud. Now I sound like the astrology guy, but when you see this setup so frequently, my mind automatically just goes to edge move here. So my mind is automatically in a short bias, it's in a risk off bias because of the possibility of this move for things like gold and BTC. So if gold does make this edge-to-edge journey over the next couple months or whatever it is, I expect BTC 100% to follow, even with the slightly negative correlation there. Here's NASDAQ on the weekly, red for the week. And I don't know if things can look much toppier than they do now, honestly. I mean, you have this massive TK disequilibrium, prices a million miles away from the Kijun, which is the mean reversion point. Prices a million miles away from cloud support. I mean, all this stuff, just looking at, eyeballing the distance of price from these averages compared to where, arguably healthy movement looks. I mean, it's completely different, right? It's a different animal. But on the other side of the coin, we have money printing. So if we get money printing, which we most likely will, then, this sucker is just going to keep being pushed up. Same thing with SPX. That's just going to keep getting pushed up. Same story though, massive TK disequilibrium, extremely far away from the mean here, hasn't touched the Kijun since mid last year, basically when it bounced, kind of in April, May. So a correction looks like it wants to happen very soon. Looking at this just in a vacuum, not knowing that money printing is coming. But this is not normal. You can see how this looked semi-normal, this looks extended, and this just looks like it's unprecedented, right? This, if you think of it as just a mean reversion potential or mean disequilibrium, that sort of thing. You can see what happened when it looked like it did leading into March even. And, I don't think we're going to break below the cloud on SPX and NDX, but going back to 3K for SPX, certainly reasonable mean reversion, just based on what I'm looking at here. Doge, somehow in all this mix, I'm talking about it on the legacy vid, because how can I not? It's at 22-month highs. It's up 220% over the past day. This is absolute insanity. All of this, of course, is the RH effect, Robinhood. And you're having crypto people pile into that as well. The best thing about it, what I'm going to talk about with all these charts, AMC, GME, not only does there need to be a short squeeze, but the setup needs to be right. You can't pump Doge 250% when it's at 100 sats, right? Maybe it will pump it at that price, but it's so much easier to bring something up when it's basically zero, right? And look how many weeks, this is the weekly chart, by the way, Poloniex. Look how many weeks Doge was basically at all-time lows. It was at 15 sats or less, 15, 14 sats, somewhere around there, for around 2 months, and then it popped up a little bit kind of with all the alts and everything, and now it is, right, taking a mind of its own. It's got 3.5 billion in volume today, which is insane for this coin. This is, when people look at this chart and they see the types of moves that Doge has had, this is the kind of silly, crazy nonsense that needs to happen for Doge to be where it's at right this moment. It's just not unprecedented. It's natural for Doge to cycle basically between 14, 15 sats and 100 sats. Now, it'll be interesting to see what happens if and when we get to 100 sats, which historically has been basically the cycle top, the super cycle top, if some of you want to think of it like that. Who's going to be buying at prices above 100 sats? The good thing is that on retail platforms, this isn't priced in BTC, I don't believe. I believe it's just priced in USD, so it's still sitting at 2 pennies right now. And to people who don't know any better, like most of retail, they're going to say, oh, I can buy 10,000 of something, right? I can buy 10,000 Doge. And the multiple on that's going to be insane if this goes to 4 cents, right? And this might get this crazy effect where we see some never before seen spike to like 300 plus sats in this current moment over the next week. So I think Doge does have room for more, as crazy as that might sound. The very least 100 sats. But to think oil went negative on futures. Robinhood, TD Ameritrade, Merrill Lynch, Webull, all these places are closing trades for people because they've just broke the market. So I think Doge could go to insane levels. This is GME, and pre all this breakout, there was an inverted head and shoulders. Okay, so maybe you think TA is nonsense and garbage, but here we are. I wasn't in this. I don't look at legacy stuff for the most part. I didn't trade any of this, but it's just funny how even Tesla, Tesla on the run up, I talk about Tesla a lot, that had an Adam and Eve before the run up. This had a multi-week, basically a 1 year inverted head and shoulders, and or some sort of ascending triangle, but more of an inverted head and shoulders type thing. Not only that, but the short interest was 130% short, and it's still, as of yesterday, 120% short. I'm guessing a lot of these guys are covering their shorts at this point in time, but don't come crying to regulators when you're short more than exists in physical form, and then that trade goes against you. I have no sympathy for you. That's just common sense, right? And why are you 120% short at basically the bottom? I don't know if they were 120% short at $6, but this is just natural market behavior. I have no sympathy whatsoever. This isn't manipulation. This isn't hacking. This is just how it goes. Here's AMC, same story. It was like 30 to 50% short interest. And this is why it's important to pay attention to these things, and I talk about it all the time. Stuff like this happens, right? This is part of the game. You want to be short? You and all your buddies want to be short? Guess what? More people can go against you and say, I don't think so. AMC might not be worth what it is. It's during a pandemic. GME, is it worth, quote unquote, $200 plus a share? No. Doesn't matter, right? Like, this is part of the game. This is part of the game. So here's AMC wicked to 20, blew out a hedge fund or two. We're still hearing the fallout from that. Love to see it. Get wrecked. No sympathy. In 2008, there was no sympathy for Main Street. I have no sympathy for Wall Street in this very moment. If anybody who knows how to play the game, it's them. So they should know better. Here's Bed Bath & Beyond. This is one I was actually in since February. Where was it? February 2019? No, February 2020 is when I bought. I held through all of this. I got rid of it at 47 this week. But this is another one that had a massive short interest. And I showed this a couple weeks ago as an example of the craziness going on in markets right now. I think it was at like 15 or 20, something like that. And here we are, and it spiked to 50. Just insane. And the last one I'll mention is Nokia. Something else, most of these companies you've either never bought or never heard of in the past 10 years. I haven't walked into a physical GameStop store in I don't know how long. All the games are being sold online now. That's irrelevant, right? None of this matters. It's about the game and the casino that is trading. So Nokia spiked to $10-ish, $9.50. So we'll see what all this means for legacy going forward. A lot of people think it's not good as far as exposing the cracks in the system. That's great, but the health of the market, it's very sick right now, clearly. So over the next week, I'd continue to watch stuff like Doge, definitely. I'd watch stuff like GME, just sort of as a proxy for what's going on. If GME crashes sub 50, sub 25, just Eiffel Towers back down, that's sort of an indicator that the hedge fund darkroom people have gotten control of the reins, and they've made money on their shorts or whatever they're doing at this point. But I'd definitely watch those in the next couple weeks. I'd watch for stimulus news. I'd watch the Dixie, and I love watching the VIX. It's one of my favorite pastimes, honestly. I wake up, I look at the VIX because the VIX sort of is the soul and heart of the market.